Welcome back. Today I'm going to be talking about the falling pound and how it impacts our shares in the stock market. I'm also going to be talking briefly about Cineworld and Boohoo's recent investment in a beauty group. So jumping straight into things here, we can see that actually my portfolio here has not done that well. Now that said, I know in the last week my performance is actually different here because my portfolio total value as of last week was actually different to that of what is on the spreadsheet. It's just that I've not updated it very well. Regardless, I'm going to take this figure at face value. I'm going to assume that I've lost 10% this week. Does it impact my strategy in any way, shape or form? Absolutely not. Therefore, I will continue buying as and when I receive my income, which will be in next week or the week after this portfolio due to the bank holidays coming through. That said, there is quite a bit of news items today as well. So we're talking about a falling pound at the moment. And what you might go is, okay, falling pound. How is that a concern? What does that mean for us as investors in the stock market? Is this something I should be concerned about right now? And actually, well, it's kind of mainly due to a strong US dollar. Strong US dollar has certainly overshadowed the pound, especially in the last year, in which a year ago we were at £1.36 to a dollar, and we're now down 13% now to £1.18 to a dollar. Sure, we've seen a similar trend in the likes of euro as well in the last year, but at least in the last year, the pound has strengthened against the euro, suggesting that, let's say, investors or speculators in the currencies have less consumer confidence in the likes of Europe compared to that of Britain, and then compared namely to that of America. Now, America is certainly leading the push at the moment, and it does make sense as the US dollar is now the world's reserve currency, and the pound has sort of had its time. Now, that said, you might go, well, a falling pound, that's a bad thing, right? And I suppose you can spin it in either directions. In my opinion, it's mainly a neutral perspective, but it depends on where you're positioned. Because let's use Boohoo, my largest holding, as an example here. A falling pound could be advantageous for Boohoo as they try to expand into foreign markets. It does mean that it will cost them more in terms of pound value to purchase properties, warehouses, infrastructure and goods abroad, but it does also mean that they'll be able to sell their products at the current price provided they don't adjust it, and their products will seem cheaper. And because the products seem cheaper due to the falling pound, we're going to see more foreign attraction. And these foreign attraction might start buying Boohoo because they think, oh, that's more attractively priced due to the falling pound. And therefore, Boohoo may see more exports. They're going to see more sales abroad from the UK. And that can be a good thing. But at the same time, you've also got to consider the likes of Boohoo and getting their materials. They've got to source the materials, which they usually are imported from wherever they get it from. Let's just say, for instance, India, like with the likes of Primark. Now, if those goods are imported into the UK, that's going to have a cost, obviously, and with a weaker pound, that's only going to add more and more to it. In my opinion, in this situation, the best way to avoid a falling currency in either direction is to be invested in a company that has international operations, and Boohoo is exactly in that position as well. So the falling pound overall means stocks typically do see an increase in value, actually, and this is typically as the markets see the falling pound, and let's say the more international exposed ones will do better. So those that have some operations in the UK, but a majority of their operations outside of the UK, let's say we've got a company with 80% of their sales in the US and 20% in the UK. If they're making a majority of their money in dollars, it's now better for them because they can continue their expansion and investment in the UK because now their dollar buys more pound related goods, and this means there's more foreign attraction, which I've said, but also more foreign investment, so that can be a promising sign as well. That said, there are quite a few drawbacks, as I've mentioned, so overall it's a neutral statement. I don't think it's something you should follow too closely unless there is a significant concern that we do believe that GBP itself is going to collapse, and realistically, is that going to happen? Likely not. I mean, at least not in my lifetime, and it really depends on the actions of the current government, which I'm not going to get into politics because it does not interest me whatsoever, but it really depends on the actions of the government over the course of time, and if, for instance, somehow Britain gets in a ridiculous situation that they can't get out of, and at which point I'm sure you'd probably not be invested in the UK, or if you did, you'd only have a small slice of exposure towards it. Speaking of successful businesses in the UK, Cineworld has actually recently declared bankruptcy. Now, they had mentioned before that they were looking to file, or they were looking for people to perhaps purchase them and to have some assistance. I can't remember what it was called. I've lost the word. It's just gone from my head. But basically, they were available. They were listed effectively, and they were looking to see if other businesses would like to take a slice, give them a bit of capital, give them a loan to keep them going. And really what's happened here at Cineworld is that they've lacked interest. People are not going to the cinemas at the moment. It's just not what you do. After all, if you've got Netflix at home on your computer or, anything else, or even a TV, then a lot of the cinemas aren't really going to do that. That said, Tom Cruise's recent movie there did do quite well, and I thought there could have been a rebound here, especially as we see a lot of these cinemas now target the more premium market. You go into them, you've got more of a recliner seat, you've got the vibrating chairs, all of that, the nicer atmosphere. So it does seem that there is a space for cinema in the future, but I don't know if Cineworld, well, it's definitely not at this point, is really going to be the one that sits at the forefront of that. And I think really it would have to be a business that dedicates itself to the experience. I think the days of having 5 or 6 different rooms for cinema or for different screenings and showings is gone. I think a business that has a good strategy that combines a cinema with another style of activity, perhaps it's a bar that you go watch a film and you go get pissed up after, perhaps that's where it's going to go. But obviously innovation industries, you don't know really until it happens, and at that point it's done. Now Boohoo here have made a strategic investment in the likes of Revolution Beauty Group. Now, they've said they've amounted a direct interest as close of 7.1%. Now, this builds on their existing relationship between Boohoo and Revolution Beauty, and apparently they sell some of their Revolution Beauty's products through their consumer brand websites and online digital department store, Demodems. Now, apparently they believe in the growth potential of Revolution Beauty, and they want to be a supportive stakeholder. Now, if you're a keen viewer of the channel, you would have known that I've constantly called out the idea, especially when Debenhams was first acquired, that Boohoo were going to move into beauty. And it is certainly happening. We're seeing more and more of a move into beauty. After all, it's high margins. It's a fantastic business to be involved with, and they can both sell high-end and low-end beauty products, and they'll be able to facilitate that demand very well. After all, beauty is a consumable. Beauty is very important. There's not many people that don't really wear makeup in Western societies these days, so I do think there is a lot of value there and repeat customers at the very least. However, their investment in Revolution Beauty Group is certainly raising some eyebrows. Now, they've said here that it intends to be a supportive stake, which makes sense to me because this company doesn't really offer much in terms of profits, which I guess neither does Boohoo. That said, they do have a revenue of about £160 million, and they're only valued at £82 million. And when you actually look at the past performance of the shares themselves, well, it's not gone too well, to the least. They've only recently listed, and since then it's gone down and down and down to 17p from £1.66, so about an 80 to 90% decline here. Now, when we actually look at the ownership, I don't know if Boohoo are actually listed on here just yet. Hasn't been updated on Simply Wall Street, but 7.1%, excuse my voice correct there, 7.1% stake in Revolution Beauty Group would put them at about, let's say, 21 million shares. 21 times 17 pence, you can get a stake here that is about £6 to £7 million, which is a fair chunk of money to have invested in a company that is worth £82 million. And especially when you consider that Boohoo is losing money at the moment, it's interesting to see. But I guess because obviously they're not making money, their free cash flow is negative, that effectively what they're doing here is they're going, look, here's £7 million, we're going to require a stake in this business, and this may help you. I'm guessing this was a private placing. I didn't read too much into it. It doesn't really suggest much. I'm guessing they didn't just buy the shares it's on the secondary market from other shareholders, and instead actually directly supported the business in this way, shape, or form. I suppose it would say if the shares have been diluted, but I don't know here because they haven't really brought down Boohoo's stake. Now, I'm a little bit annoyed by this move. I don't think it was absolutely necessary. I do think they've got the capabilities themselves. That said, if Revolution Beauty Group does have some good products, I guess Boohoo could be making a good move here. But I'd rather they focus on their own operations, learn to cut costs as efficiently as possible, whilst also being able to maintain long-term growth. They've made substantial long-term growth or capital expenditure in abilities to drive further sales. They've got the warehouse capacity, they've got automation coming in. I do think there's a lot of promise here, but at the same time, I do want them to be a little bit more cautious and not so money happy, because obviously they will drain through that cash balance, and they'll also go through that draft loan that they've got, which obviously they've got access to a revolving credit facility of £325 million. They've already got £100 million of debt in an overdraft facility. I don't really want them going too much into debt, as that lowers the quality of the investment. More debt means there's less equity, or in terms of a ratio, if they're not growing as fast, and that obviously means that my value in the investment will lessen over time. Thank you for watching. Have a fantastic day.